For our viewers, SJS Enterprises makes the aesthetic products for auto and consumer durable sector. Interestingly, Ashish Kacholia has around 3.84% stake in the company, and of late we have seen a bit of a positive momentum build up when it comes to SJS Enterprises. But Mr. Thapar, coming to the business prospects itself, there is a lot of buzz that we are hearing about the rural sentiment improving. What does this mean for the two-wheeler demand? Are you also seeing an increase in order inflow as far as this entire rural recovery theme is concerned?
There's a very strong recovery in the automotive segment, both for the passenger vehicles as well as two-wheelers. And testimony to that is that we've grown our sales in the first half of this year by about 26.5%. So very buoyant growth.
Okay, fair enough. Mr. Thapar, that point is taken. But for the entire year as well, you had given a projection of a growth of around 25% in terms of sales. Now, given the fact that the first half run rate has been 26%, what's the likelihood that you are going to better that? And will the margin profile stay between 25 to 27, or are you expecting some improvement there as well with the commodity prices coming off?
We are fairly confident that we'll maintain our guidance of 25% growth for the year. So that, of course, depends on how the market pans out. But at the moment, we are on target to achieve whatever we guided the market to. And in terms of profitability as well, so we hope to positively improve that. But fundamentally, our guidance at 25 to 27% EBITDA stays for the moment.
So I just wanted to understand in terms of, how are you managing with so much problem in terms of volatility in commodity prices? Is it getting difficult to maintain margins because, you get the impact earlier or the benefit earlier, but it's difficult to pass on the same thing?
So, we have a product which gets refreshed every year. So there's a chance to, so the product changes, the product profile changes. So the new raw material prices automatically get priced into any model change that happens. And this happens between 1 to 1.5 years every year. So we don't have a legacy of old pricing remaining. Plus, of course, we have a very diverse supply base and we have a buying leverage because we are one of the largest consumers of the commodity that we buy. So we've been able to maintain that margin, not now, not this year, but for the past 5 to 6 years, SJS has been consistently delivering EBITDA of over 25%.
Mr. Thapar, and we talked about the demand as far as the domestic economy is concerned, but what about the export economy? Are you seeing some sort of slowdown with respect to export demand, especially with the headwinds coming in from Europe?
Certainly, there is uncertainty in the European market because of this ongoing war, which sees no sign of ending. But our exposure to Europe, for example, is pretty small. So exports are about 13% of our sales overall on a consolidated basis, and Europe accounts for about 45%. So that shortfall has been far than made good by very strong domestic demand that we see and the demand for this new generation products that we offer to our customers in India. So domestic demand has far neutralized any negative impact of exports. So that's, which in any case is very small for us.
Right. Sir, but we've seen the overall auto pack is also not growing much in terms of the demand. So how are you confident of growth? Are you looking for more market share across various players, or are you looking at newer products and newer things which gives you better growth benefit?
So newer products and new technology products are what are driving growth at SJS. So despite the underlying market, we outgrow the market. And we launch a lot of new generation products, and there are a lot of new generation products also in our pipeline. So that is going to drive demand. Customer wants more and more premium products. The human machine interface parts we supply in addition to the aesthetic parts. So that's seeing a lot of traction. And remember that we supply to the who's who of the industry, both for the appliance and the automotive sector. So we are benefiting from this transition that's happening towards more high technology, more premium products demanded by the customer. So that increases our revenue content per product that we supply. So whether it's a consumer appliance or it is the two-wheeler or the four-wheeler.
Just before we let you go, Mr. Thapar, last question when it comes to your Capex plans as well as acquisition plan, because I understand the balance sheet is quite comfortable, net debt-free company. So in terms of the Capex plus the inorganic acquisition, what's the roadmap?
So as you rightly said, we generate a large amount of free cash. As of now, we have about 130 odd crores in our books available as a surplus to deploy So we've already announced Capex increase plans for a chrome plating and painting facility in Pune because we see a very strong demand pipeline. And in addition to this, we also have a target on buying some companies that can add value in terms of acquisition targets for SJS. So we are actively pursuing and looking at the right opportunity. But the underlying theme is maybe access to new markets or adjacent technologies that could supplement the already very large portfolio that we have at SJS to make it more widespread, having even a larger portfolio. So that is going to be the theme. And as I've mentioned earlier, the geographies of interest to us are North America, Europe, ASEAN, and even India is looking good at this moment. Very strong, robust growth. So we are looking for acquisitions, and we will do a synergistic.
Yeah, no, Mrs. Thapar, just to get the clarification, so since you said the geographical area that you're targeting is North America, Europe, ASEAN, are you saying that the acquisitions are likely to be in that geography as well? Is that the plan?
That's right. So we see very large markets there globally, and anything that allows us access to a larger market, or as I said, an adjacent technology that expands the footprint. So it's going to be a strategic decision. At the base of all is going to be that we have or we maintain our high ROCE that we generate in this business. So we intend to keep maintaining that. So we will be mindful of the acquisitions that we do, but we see a lot of opportunities out there.
In the event of paucity of time, just quickly wanted to get a sense from you. What's the size of the acquisition and timeline? Should we expect something in the next 3 to 6 months itself?
We are not marching to a time clock. More importantly is to get the right acquisition at the right valuation. So that's the critical metrics for us and the overall strategy that we have. So yes, we are looking at acquisitions, but I would not like to guide on the timeline because we want to pick up the right company. That's important.
On that note, we let you go, Mr. Thapar. Appreciate you joining us on the show today. For the markets, we are still below the 18,600 mark for the index, but